Hello, everyone. Welcome to Money Hour Radio, a show where we try to help you grow your money, cut your taxes, and have a beautiful retirement. I am one of your co-hosts, Ben Barzideh. I have my trusted, esteemed co-host, Matt Nadeau here.
Hey, everybody.
We are both founding partners and wealth managers at Barzideh Nadeau Wealth Management, a comprehensive financial planning firm located locally right here in Barrington, and of course, serving the greater Chicagoland area. We are fiduciaries, and as an independent family-owned firm, we truly have the freedom to focus solely on your interests, not some corporations or those shady private equity companies buying everything up these days.
Yeah, and of course, want to take a minute, say hi to all of our clients who are listening today, and also our faithful listeners out there, but especially our clients. We appreciate the trust you place in us, and we love every one of you. And we, of course, have a big show, a great show planned. Obviously, the big headlines that have been happening this week so far was the Iran conflict. And we're going to really focus on, especially with this conflict or any real geopolitical conflicts, what does it mean for the markets? What drives the markets to being long-term bearish game changer? And we're going to talk about that. And then also what really spins off from that is, okay, if it becomes a big issue, what are you going to do about it? And we actually have actively managed portfolios. So we're going to talk about how that can impact you when we get times of volatility, and you don't want to miss that. And then later in the show, when we come back from our break, we've got a really cool feature about 529 plans. They keep expanding them, they keep making them better. But one of them is specifically if you're a grandparent and you own the 529 for your grandchild. We call it the grandparent loophole. You don't want to miss it. It's really powerful.
No doubt. And as always, before we start, we encourage you to subscribe to our YouTube channel on moneyhourradio.com, where you can view this week's episode along with previous ones. You can also subscribe to our weekly economic newsletter. It's called the 5-Minute Market Brief. It's informative, succinct, easy to read, gives you a really good idea of what we're seeing, what we're thinking about, what we're analyzing in the market. You can sign up for that at bnwealth.com. All right, let's get into our first topic today.
Yeah. Now, first, obviously, as I mentioned, our topic's going to be the Iran conflict and what it means for the markets. And Ben, due to scheduling issues, we're actually recording this much earlier in the week than we usually would. So if there's major changes that happen towards the end of the week before you hear this on Saturday, don't blame us.
Yeah, we didn't have our head in the sand.
That's right. But it should not change the overall theme when we're dealing with this and what we're watching for, right? And obviously it started with US and Israel conducting these significant air-based military strikes on Iran, and then Iran retaliating with some regional targeting of US assets. And of course, one of the big things they wanted to do to make a big impact is close the Strait of Hormuz. Now, markets always are going to react in a predictable fashion with this. Oil surges, global equities drop, and volatility increases. Now, when geopolitical conflict erupts in a major energy-producing region like Iran, that's where markets are going to price in supply risk. And that's the start. That's what we're seeing right now.
No doubt. So, however, the more important question is whether this becomes a meaningful bearish game changer for the market or just some short-term volatility spike. And at this stage, it is too soon to tell. Temporary oil spikes create volatility, while sustained oil shocks create inflation pressure and economic drag. And if oil supply is disrupted for an extended period of time, it could push oil structurally higher and delay or derail some Fed rate cut expectations. It would also increase transportation costs, which would hit corporate earnings, and it would also hit the consumer in elevated gas prices at the pump, thus reducing spending on other things. And President Trump said that the potential for troops on the ground in Iran could not be ruled out, and a big wave has yet to come, referring to further military strikes.
Yeah, and then, of course, the IRGC announced the Strait of Hormuz was closed. and any vessel attempting to pass would be a target. So these are critical because it's not that Iran is actually the biggest oil producer. I think the numbers are like 5% of the global. But the
Correct.
problem is there's about 20 million barrels of oil that pass through the Strait of Hormuz each day. And if that ends up being materially interrupted and they reduce that for an extended period of time, so not a day or two, but think of weeks without an end in sight, that could send oil sustainably higher. So now this is something we're in full monitor mode. We're watching it extremely closely. And it may turn into something that requires us to become more defensive for our client portfolios. And again, like we mentioned earlier, if something major were to happen between now and when you're hearing this on Saturday, we may have already taken more defensive position for our clients. In many cases, if it gets really bad, we will exit the stock market completely. But for now, we're in full monitoring mode and we're watching it closely.
Now, something that President Trump also said was that they're going to try to take measures with our Navy, the U.S. Navy, to open up the Hormuz Strait again, also maybe escort oil tankers. So hopefully this is not going to be a long-term problem. Hopefully that uh, strait is opened up and we can have some of this volatility get back down. But this actually transitions into our next segment, which is why we actively manage our client portfolios tactically. And for retirees drawing income from their portfolios, which is a bulk of our clients, risk management is not an abstract concept. It's a daily necessity. And unlike younger investors who can wait decades for markets to recover, retirees unfortunately have a limited time horizon and ongoing cash flow needs. So in this context, tactical investing combined with disciplined sell strategies can offer a potentially safer framework than a traditional buy and hold, ride it out approach, particularly during severe downturns such as an S&P 500 market collapse, like an '08 type of crash, a 2000 type of crash, even COVID, which is about a 35% market crash in 18 business days. The Fed, of course, pumped in a lot of stimulus, fixed that up real quick, but those sometimes can take a lot longer to recover.
Yeah, yeah. And the key thing is our process is designed to help protect retirement during catastrophic drops. It can also help some of the younger investors if you're worried about sleeping better at night and watching your hard-earned money go away. But really where we see one of the primary advantages of this kind of active investment and tactical investing for retirees specifically is this drawdown control. The aim is to reduce losses, and that is especially important if you're compounding the portfolio withdrawals by taking income out of your portfolio. We have seen in the past, if somebody isn't actively monitoring their portfolio, it can deplete your assets quickly. So think about the math. If you have a 50% loss of your portfolio, it takes 100% gains just to get your head back above water to break even. So avoiding large losses reduces this mathematical burden of recovery. Smaller drawdowns also provide this psychological benefit, helps you stay committed to your plan rather than making these emotional decisions at the worst possible time. Basically, it's like you sleep better at night, little, you know, little peace of mind and even better dreams, right, Ben?
Yeah, we can't prove that, but we've been told our process not only helps you sleep better at night, but you have way better dreams as well. So,
Wonderful. That's what we want.
exactly. So, bottom line, all kidding aside, protecting principal can do two things. It can enhance the longevity to the income streams and also reduce the probability of portfolio depletion. That's why we believe in it so much. And in our advance and protect models that we actively manage for our clients, we move our allocations towards areas in the market with momentum and strength. Likewise, we avoid areas of continued weakness. And as the trend changes, so does our allocations. And that's why we actively monitor our investment positions every day. What we see impacts what areas we may invest in. But here's what's important. If the overall market conditions deteriorate, we will get defensive. We will actually do something by selling out of the stock market and going heavier into bonds or cash while we wait for things to improve. We always like to ask, does your advisor do that? Do they have the same exact investment strategy and allocations, regardless of whether it's a bull or a bear market? We joke about how that's like wearing the same outfit on a 85-degree hot sunny summer day as you would during a winter blizzard. That doesn't make sense. So for us, we will literally get 100% out of the market at times if the conditions warrant it. So we don't believe in riding market crashes all the way down in retirement. And if you gravitate towards this concept, if you want your money managed like that, then you look our way.
Yeah. And again, ask yourself, do you have a defensive plan? When a potential market crash happens, we feel you do need it. And if our investment philosophy resonates with you and you're really thinking, I'd love to have my money managed in a process like that, please reach out to us. We'll do a complimentary consultation and we'll go over not only our investment process, but your current financial situation and your goals and make sure it all aligns. And if we can help you, that's great. If not, we understand. So reach out at bnwealth.com or call our office at 847-780-2980. All right, don't go away. When we come back, we're going to talk about grandparents owning 529 accounts. This will be great. Welcome back. Thank you for tuning in. This is Money Hour Radio, a show where we try and help you grow your money, pay less taxes, and have a beautiful retirement. I'm one of your hosts, Matt Nadeau. I have with me, of course, my esteemed and knowledgeable co-host, Ben Barzideh.
Hello, everyone.
And we are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management. It's a comprehensive financial planning firm. We're located in Barrington. We're independent, and we are here to serve the greater Chicagoland area. And as we've said before, we really do value giving back and trying to make our community a better place. And that's why we've launched the charitable arm of our company. It's called BN Giving. And it's a way for us to invest in your purpose with you.
Here's how it works. If you become one of our clients and you're a faithful tither or a giver to a qualified 501c3 charity, just let us know. Each year, we will match your donation up to 10% of the management fee that you pay us. So we help support your cause. And as our firm grows, so does the collective positive impact that we can have. It's such a neat concept. It's unique to our firm. And as always, by the way, if you're not a regular giver, that's okay too. Most people are not. Of course, we'd still be honored to work with you. And if you want to explore joining our BN Giving community by becoming a client, please reach out to us at bnwealth.com or call our office at 847-780-2980. All right, Matt, let's get into this segment here.
Yeah, and we really want to focus. We've talked about 529 college savings plans before, but really there is a little difference if it's a grandparent owned or a parent owned 529. So when it's grandparents, we call this the grandparent loophole. And basically the power behind this is how grandma and grandpa can actually help pay for college, slash taxes, and at the same time not mess up financial aid for the student. And yes, we're talking about the very amazing grandparent-owned 529 plan, again, aka the grandparent loophole. So obviously, I have grandkids. I love my grandkids. I think many of you out there hopefully also love your grandkids. And, many people actually will sometimes say, man, I love my grandkids even more than my own kids.
I hear that all the time.
You know why? I think it's because they have bad memories of all the pain and suffering the kids caused them, and then the grandkids they have for a few minutes and pass them off.
And then you give them back.
That's right. Well, here's a way that if you're a grandparent, you can actually put a dollar amount on how much you love them. All right. Of course, this is only something if you want to give and you have the necessary funds to give.
Of course. That's important. So these 529 college plans are actually sponsored by states and typically come in two flavors: prepaid tuition and then the savings plans. And most people use the saving plan, which works kind of like an investment account for education. You put money in it, it grows over time. And if you use it for college education expenses like tuition, fees, books, and sometimes even room and board, the earnings can all come out tax-free. So that's right, it is tax-free. It's such a powerful account. Now, here's where it gets interesting. While parents often own the 529 plan with their kids as the beneficiary. Grandparents can also open and own one of these too for the grandkids. And when they do, that's where the strategy gets even better. So many states even give grandma and grandpa, to further benefit them, a state income tax deduction or credit just for contributing. There are some guidelines on how much they'll give you the credit for. So you can help your grandkids and maybe lower your tax bill. Not bad at all.
But wait, there's more. This is like a bad infomercial, right?
Yeah.
Billy Mays here. No,
There you go.
rest his soul. All right, listen, historically, grandparents actually worried that if they did help too much, that they could in part actually hurt the financial aid eligibility of their grandkids. And that financial aid eligibility is using the FAFSA formula. I think that stands for financially abled, fiscally student association. I don't know.
I think for anyone for school
Yeah.
availability, no, it actually stands for the free application for federal student aid.
Good job. Good job.
There we go. For all you geeks out there. And that formula looks at parent and student assets. And parent-owned 529 plans count as parent assets, so it can negatively hurt your financial aid. And then, well, how about the student-owned assets? Well, those are even worse for aid. They get assessed even more heavily in the aid formula than the parent-owned ones.
Yeah, there's a twist though, right, Ben? If grandma owns the 529, now it does not get reported as a parental or student asset on the FAFSA formula. Not reported. So financial planners like us, we lovingly call this the grandparents loophole.
Now, of course, there's always a tiny disclaimer about this. So some private colleges use something called the CSS profile, which may ask more detailed questions and could treat grandparent assets differently. So, of course, check with your specific school's rules. But under the federal aid rules, a grandparent-owned 529 can be a great thing. It's a beautiful thing. And 529 plans are also sneaky good estate planning tools. We've talked about this before on our show. Contributions to these 529 plans are considered completed gifts to the grandchild. So that money generally moves out of the grandma and grandpa's taxable estate, but he or she still gets to control the account. So control and generosity. That's the grandparent dream combo, right?
Yeah. And really for the estate planning aspect, like there's this really interesting tool. Like if you're grandma out there, grandpa, and you're feeling extra generous, or you have a big estate that you need to do some movement around, there's something called superfunding. And this is where you can front load up to 5 years worth of this annual gift exclusion all into the 529 at once. It's like saying, hey, here's 5 birthdays worth of college money. You better study and not party too hard. And the key thing is this number for superfunding is right now the annual gift exclusion is $19,000 a year. So if you times that by 5, that equals $95,000 all at once that you can put in. If you're married, now you can double that. You could actually put in $190,000 between grandma and grandpa for each student. So each grandchild, for example. So you could really find opportunities to do some big savings for them and also reduce your estate. And so just recap some of the benefits. We talked about there's tax deferred growth in 529s, tax-free withdrawals if it's for qualified expenses. And there's a lot of them. They've added more over time. You get a potential state tax deduction depending on which state you're in. There's estate planning benefits. It's not reported on the FAFSA as an asset. And distributions are no longer hurting, that federal aid eligibility. What's better than
Come on.
that?
What's better than that, right?
That's right.
So if you enjoyed today's episode, hug your parents or grandparents and maybe ask them if they've ever heard of a 529 plan for grandkids. Tell them to watch this segment on our YouTube page, moneyhourradio.com. And guess what? If we were to just end this segment right now, I think we've done our part. We've imparted some really good tax ideas and strategies. We've given you a loophole called the Grandparent's loophole. So, you know what? We would be content, but no, we're not content here. We actually have another loophole that you're going to hear first here. So get this. Remember how we said parents own counts for financial aid, grandparents own doesn't? So if you do have kids about to go to college and say you're the parent that owned it, what happens if you have the ownership changed from yourself to your parents so the grandparent owns it? Well, that's the other loophole. You can do that, and technically it would not count for financial aid. Now, obviously, if your child may be going to a private school, as we mentioned earlier, you need to be careful. Also, when you're changing ownership from yourself to the grandparent, it does follow the gift tax guidelines, which between husband and wife, you're allowed to give $38,000 each year. But again, we've talked before how if you go above that, it's generally not a big deal. All that happens is you're supposed to help keep track on your taxes and reduce it from the 15 million lifetime gift tax exemption, 30 million combined on the federal level between husband and wife. But of course, the state of Illinois, you start having death taxes after 4. So, but
Yeah.
but
Things you got to worry about.
strategy. Yes.
Yeah.
You
And
gotta
again, with these financial planning ideas that revolve around investing or tax or estate planning, it is essential. Even though we're experts and you're hearing us on the radio, don't just run out there and try to do it on your own. You want to work with a qualified professional, somebody who understands these concepts, can tailor them to your situation, and make sure there's not something you're missing that could negatively impact you. And usually, we see this start with a good financial planner like us, where we can act as like the quarterback of the plan and help coordinate or direct you in the right direction with CPAs, attorneys, whatever's potentially necessary. So if you're out there and you're in need of a good financial planner, someone who puts your interests first, we'd be honored. Give us a chance, an opportunity to talk to you. If you've heard about our investment philosophy earlier or our financial planning philosophy, reach out, schedule a complimentary consultation, and we'll go over your full financial situation, your goals. We'll do an investment and financial checkup. We'll review insurance, taxes, estate plan, investments. If it looks good, you get some peace of mind, and we'll tell you. If there's issues or holes, we'll let you know what we're seeing and potential things to fix. And many people have never had somebody look at all of these areas in their financial life at one time. And again, if we can help you, that's great. And if not, that's okay too. We'll still part as friends. So, of course, if you want to explore or learn more, reach out online at bnwealth.com or give our office a call at 847-780-2980. Again, it's 847-780-2980. All right, Ben, I think we're out of time this week. God bless y'all, and we'll see you next week.
Take care, everyone.